folks, it's Matt Hayson here looking at everything impacting Sydney's property market this week. Well, the federal election's been run, it's been won with Labor securing another 4 years. But here's an interesting stat you may not have heard, and according to the Australian Electoral Commission, that voter turnout was tracking towards just 77%. That's the lowest level since World War I, a telling sign of the political fatigue that a lot of people are potentially feeling. Let's turn our attention to real estate though. The election closes a chapter on a highly disruptive period. In April, Sydney's new listings dropped by a staggering 23.6% as sellers avoided Easter, Anzac Day, and of course the vote. The auction results, well, they were soft. I want to go back in time. The Easter weekend, the clearance rate was sitting at just 43.5%. Anzac Day weekend, 43.2%, the lowest clearance rate for the year, and the federal election weekend has just finished, but only slightly better at 44.4%. That said, Sydney prices, they still nudged up, according to CoreLogic report. Sydney home values up by just 0.2% in April. So, what are the takeaways? The property market doesn't respond well to distractions, and a federal election, they aren't much bigger than that. Now, if you can, avoid auctioning your property in that window. Think about that into the future in the next 4 years ahead. Now, on to the good news. Change is very much in the air with the election behind us. The market's already feeling, in our view, somewhat lighter, but there is more. NAB is forecasting 4 rate cuts. Yes, I said it. 4 by August. That's 100 basis points starting potentially with a 50 basis point cut when the RBA meet this month. Now, CBA, in anticipation of the RBA meeting, has just cut its digital variable rate to 5.84%, matching Westpac and ANZ. And with weaker household spending and softer retail figures, that very much paves the way for the RBA to cut when they do meet on May 19 and 20. So, where does all of this leave us? Well, I can tell you this, listings are likely to remain low as we head into winter, but there's now a clear runway for buyers and sellers. No holidays, no elections, just open market conditions, and that's very much a good thing. Employment remains stable, and it's highly probable that we are now heading into a rate cutting cycle. Now, all of this points to a shift from a distracted market to one of clarity and one of confidence. And here's what we expect to see evolving over the next few weeks. Buyer confidence is likely to lift. Even a small shift in that makes a very big impact for us, and we notice that very quickly. Engagement will improve, more serious buyers, more reliable offers, and urgency will return, and we'll likely see clearance rates and prices start to lift. Now, we're not saying it's a boom time market, everybody relax, but if Sydney posts 3, maybe to 4% growth this year, that's a solid and respectable outcome. Of course, there are always curveballs, trade tensions, global uncertainty, but for now, the market has a very clean canvas in front of it. Already this week, we're seeing stronger buyer conversations, more confidence, and we expect to see that roll into our open homes this weekend. So, that's what's going down in and around the property market this week. Thanks so much for watching, and I look forward to catching you all next week.